What can we learn from Paul Tudor Jones to help our trading? Stay tuned. I'll be right back. G'day traders, Stacey Burke from Stacey Burke Trading, and today is day 2 of our special tribute this week to hedge fund managers and great traders. Yesterday we talked about Ray Dalio and 3 things we can learn from Ray Dalio to improve our trading. And today we're going to talk about Paul Tudor Jones. And Paul Tudor Jones is head of Tudor Investments. He's one of the traders featured in Market Wizards, Jack Swagger's Market Wizards book. He's also a well-known philanthropist with the Robin Hood Foundation, but largely Paul Tudor Jones is known as a legendary trader. He started pretty much from nothing, and rumors say he earns approximately in the area of $800 million a year, obviously from his fund and trading and everything else. But that started from hard work. People have said, if you've read much, he's the best trader they've ever seen. But 3 things we can learn from Paul Tudor Jones. If you get a chance, if you can find it, there's a documentary on Paul Tudor Jones called The Trader, I think. You probably won't be able to find it. It's very hard to find. I've watched it a few times, but it disappears quite quickly. Paul Tudor Jones had it removed and bought all the copies, apparently. I don't know, because I don't know him, but that's what I've read. But 3 things that I think we can all learn and apply to our trading from one of the legends. Number 1 is you need to be 10 times more focused on your defense than your offense. And we tend to focus on our winners when they're going well, and when we're losing a trade, we don't want to look at the charts or look at our portfolio or whatever the situation is. And I read that Paul Tudor Jones comes into the office, and the first thing he wants to know in the morning is which positions are down money. And he wants to be able to see right away if he needs to cut his losses on those immediately or how to manage that appropriately. And the other side of that is that if you've read much and you've been able to do a bit of digging, he looks for the opportunities where his reward to risk is 5 times to 1. And what he means by that, or what you can grasp out of that, is that if you're looking for a trade, you want to be looking for the possibility of where your entry is going to be 1 unit, and possibly the area where that is going to trade through to is going to give you 5 times that risk. Now, obviously, if you do the math on that, you can be wrong 5 times for every winner. But obviously, if you've got a high positive trade expectancy, you can certainly do extremely well with 5 times your return on your money. Now, a big part of that is patience. So, number 1, be focused on defense and managing the downside. Number 2, diversification. Don't have all your assets in one class and assume that because they're different instruments that they're not correlated. So obviously, if you're going long the pound, long the euro, long the Aussie, you're high probability that you're trading correlating assets. They may not have the same average volatility per day, but largely those instruments are you're shorting the US dollar and you're long the other pairs. So you could be tripling or doubling your risk on a trade. So you may want to look at other cross rates, the pound yen, euro New Zealand, but obviously you need to be understanding of which pairs are correlated and possibly even which markets. If you're all in the share market, there's a high probability you're in all correlating assets, because the market as a whole will move up and down like a tide with rising and lowering ships. But I think number 3 is the most important. And Tudor Jones, when he first came out of university, went and worked for legendary cotton trader Eli Tullis. I'm not sure how much time he spent there, but he talks about, the first 6 months, all he wanted to do was trade. And he told Eli, he said, Eli, I'm ready to trade. He kept bugging him. I want to trade. I want to go live. I want to trade. And Tullis said to him, hold on, boy. Let me ask you something. He said, the markets are going to be here in 30 years. The question is, are you? So you need to have patience, and you need to really, really just keep repeating to yourself, every single trade you take is just another trade. So 3 things that you can learn from Paul Tudor Jones. Manage the downside. Always be focused on defense and look for opportunities where your reward to risk is 5 to 1. Diversify your trades. Don't be all correlated into one trade where you're doubling, tripling your risk. And number 3, be patient, wait for your best trade setups, and stay in the game, traders. Every trade's just another trade. You're going to have thousands of trades. Stay in the game. Hopefully this helps. Hopefully you enjoyed today's episode of Daily Pip Talk. Again, I'm really grateful for the questions and the feedback. And tomorrow we'll be featuring another legendary trader. So traders, have a great week. First day back after Brexit on the Monday. Already had a gap on the pound from the close. Stay disciplined, stay focused, and have a great week, traders. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.